Hey guys, welcome to another video brought to you by Total Control Traders. Part 2 of ticker reviews. Had some technical difficulties. Wanted to get all the tickers through on one video, but seemed to have been cut off. Alright, let's give this a second try. Resuming IPO tickers. Second of 3. Dash. Strong chart. Huge upper wick on the daily. We are holding that support zone. Clear bounce from it. No notable volume. And from here, this actually lined up perfectly. Retest of support zone and the wedge upper trend line. So from here, ideally, Monday, we want to see that follow through right away. Chart's looking great for a bounce. Let's keep an eye on it coming Monday. Next, AI. Drew this in the video that didn't get recorded. Anticipation, probably going to be pinned on this above this trend line. We can see resistance, resistance, and resistance. Support, support, now a support again. Anticipation for the downside over the longer term, but we'll anticipate something like this. Right now, bear volume, not too convincing. Not a whole lot of sellers on it, but not a whole lot of buyers either. Volume pop, no follow through. Look for either a reversal, but anticipating a little bit more downside due to this lack of follow through and the bigger upwicks. Alright, that's it for IPOs. Next up, marijuana. CGC, first one, big dog. CGC, clear resistance from back here, trend line, resistance, rejected, rejected, broke over. Now we were close to that 1 to 1.618 extension target, getting extended on the daily, big upper wick forming, anticipation, bull flag forming on the daily, which was ideally slowly come to meet the trend line again alongside maybe the daily 8. Then from there, set the next leg up. Chart's looking great. Keep in mind of the weekly chart. We are very well extended on the weekly chart, so we could be going into a long-term sideways action, waiting for that weekly 8 to catch up. But weekly is looking good because we now have that trend reversal confirmation and nice follow through. With Biden in presidency, we'll likely see. Gonna make a bold statement. I'm looking for that new all-time high on CGC by the end of 2021. That's still 11 months away. Plenty of time for us to break this 59.25 mark. That will be a day for celebration. But that's what I'm looking for. So whether if you're playing commons or options, just know your time frame. Chart's looking great. Next, VFF. Similar story, but a lot weaker. We are trading under the weekly 8, and we are bouncing from the GP. And trend line to watch, if the GP was to be broken, we'll be looking at this lower trend line. There is no notable volume. Bull divergence is forming. Here's our bull divergence forming. Again, I want to see that follow through. Hold of GP with the follow through to the bull side. Given the market condition, chance is a little bit less. Doesn't mean it can't happen. No ideal entry to me. This is more so like a no man's land, no trade zone, middle of a range kind of thing. But yeah, CGC over long term still, or marijuana sector over the long term is still looking bullish. Next, TLRY. This is one of the Reddit's preferred stocks because of its movement that it provides. If we look at it, the move ever since the trend reversal, It's already had a 412% over 78 trading days. And the latest move has been 12 trading days that provided 186% move. So chart is extremely strong, but now we're seeing signs of reversal. Triple upper wick closing on the daily. Anticipation is a little bit more downside to form that weekly bull flag. We are very extended on the weekly. We were very extended on the weekly. Now we're starting to pull back. Anticipation, most ideal zone for entry will be a further pullback, a retest of ideally a wick instead of a close. A wick on this trend line, which lines up with GP, which also lines up with previous high. Around that 1224 area. All right, next one. APHA. Okay. Anticipation, weekly bull flag to form, same idea. Marijuana, it's all the same, it's the same sectors. For the first time since January, beginning of January, we are trading under the 88. So chart is a little bit weaker versus TLRY and CGC, but anticipation is more further sideways action. Weekly, we were extended. Very nice consolidation so far. Slight increase on bear volume. No divergences. Chart's looking great. Yep. No significant red flags. If you're in there for the long run, you use the weekly 8 as your guide. Next up, CRON. Exact same thing. Not exact, but you get the idea. Decreasing bull volume. Big upper wick. Looking for that weekly bull flag. Nice bull volume. Slight increase in bear volume now. Weekly 8 is still quite a ways away. So anticipate further down action. Slow grind down. That's it for marijuana sector. Next up is China. BABA. Right. Interesting chart. The way I'm looking at this is likely the run into earnings. And now, due to the big tech earnings not being so ideal and the market pulling back due to Wall Street bets, BABA is getting affected a little bit. And we still aren't able to break over this resistance zone. Key to watch, we rejected from it and now we are trading under the 88. Bear volume stronger than bull volume. Earnings coming up on February 2nd. Not an ideal, unless you want to play lotto for earnings. Not really an ideal spot to be entering. From here, let's see what the fib retracement looks like. 0.5 lines up with this key resistance zone, 240.48. So if we were to lose this current zone of 252.50, we'll be looking down at 240.50. Okay, lines up with 0.5. Right there. All right, next, BIDU. Weekly bull flag forming. Pullbacks are a lot stronger than ideal. As you witnessed just from the marijuana, this is a lot more pullback on a single week basis. We are seeing somewhat of a bounce, trading under the 88, still rejecting from it. Use the 88 as your guide. Chart is looking at further the downside, but we do not want to lose that weekly 8. Look for that bull flag to set up. BIDU, this was a really nice run. Completely missed it. It's not on my top watch. 127% in 19 trading days. Wow. Hope someone caught that. Anyways, weekly 8 is your guide. Daily 8 is already under. So if you aren't willing to hold through, ideally you would have exited already. Look for a bounce sometime when we're closer to this lower trend line. That's it for China. Next one is Amazon. Amazon was reviewed in yesterday's video on the market review and hottest tickers. If you haven't seen it already, make sure you check it out. Amazon is one of the top watches for me, so make sure you check out the video for details. JMIA. On the daily, what a strong chart. Bear divergence back here, came back, didn't make any lower lows, just made a higher low instead. Then, boom, reverse to a higher price. Now forming another bear divergence, not as strong, but still bear divergence with triple upper wicks. So chart is looking a little bit weaker now. Back here, we were, no, it's about the same extension. But yeah, so we'll be looking for a weaker or a bull flag to form. On the weekly, we are still extended from the weekly 8. Look for that bull flag and the next leg up. These upper wicks are a cause for concern. But if you look at how much we have ran, $400%. Oh, forgot 400% in 52 trading days. Makes sense. We're gonna be coming back down a little bit. 40.9 seemed to be a key price. We can see rejection, 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 support, support. So $40.9 to $41 is a key price that we're going to be watching, but it doesn't really line up on the fibs. So if we were to draw the run from the low, still doesn't line up. Regardless, we'll be looking at further downside. Gonna have to do a little bit more digging on where we'd be looking. First and foremost level, before we even start looking at the bigger pictures, would be this one. GP 0.5 49 lines up with the 0.5. Key level to watch, $49. Next, OZON. Potential channel forming. We're seeing rejection, quite a few touches on the lower trend line, strong support on this lower trend line, and we are trading under the daily 8, so watching for that continuation coming Monday, Tuesday, and gonna have to watch for a reaction on this lower trend line. Strong support trend line. Wouldn't imagine a bounce from here. That's it for Amazon sector. Next up, EV, electric vehicles. Again, same thing. Tesla was covered in yesterday's video. Make sure you check it out. First one, NIO. All right, we are closing right on the support area, the support zone. Lost it once before, bought up right away. Bounce, bounce, plenty of bounces here. So strong support area at the top end of the zone is 57.20. We're closing right on it, 20 cents below. Watching for that bull flag. Chart is setting up nicely. Low volume on this bull flag. Looking strong. Ultimately, still looking at that 54.45. Gonna likely see a wick right on it, which lines up with the 0.5 and the bottom of the support zone. Yeah, the bottom of the previous support and the resistance zone right here, 54.45. If we were to wick from it, that is an ideal entry. Watch for the wick. Watch for the shorter time frames, volume action as well. And that next is LI. In the wedge, middle of the zone, no man's land. Don't be trading this. Watch for a volume of break, whichever way it's gonna break. Next, XPEV. Same idea. Middle, no man's land, don't trade. Key level, 58 bucks. We can see resistance, support, broke over, broke under, resistance, resistance, broke over, now support, support again. 48, which is regardless in the middle of the zone, no volume, watch for a volume break. Still missing that third touch on both sides, but given how we have dragged out like this, likely won't see a third touch. It's more gonna be a break on the third touch. Next, FCEL, strong chart. Now, one thing to note is when you're looking at a chart like this, if you're playing this, I know that a few of us are, or we played it, whether if we played it before or we are still in it, make sure to take profits along the way. No, it's got, don't let euphoria get to you. It's given a great run. It's given great returns since the low on right before the day SPX started running. It's ran 1162%. You put $100 in back when SPX the day before it started running. You put $100 in, you should be at $1,000. Is that right? 100% is $100. Yeah, you should be at $1,100 already. Okay, so know when to take profit. This is yes, I understand that this ticker has lots of potentials, but look at this. Right now, there is a strong bear divergence. We have stayed over that overbought area for quite some time. Strong bear divergence, triple wick. No notable bull volume anymore. Decreasing volume overall since this run. My thinking is more downside. This has been a crazy run, and risk to reward of holding up here is no longer there. If we're to look at where the downside is going to bring us, you know, right now we're at 20.76. Even the 0.382, we're looking at 16.21. The GP, you're looking at half the price of where we are right now. $10. Okay, don't be the last one left holding. Don't let your nice profit become a bag. Make sure to take some profits, and in order to increase that risk to reward, will help you hold even longer. Don't let the greed get to you. That's all I'm saying. Okay. The 88 is your guide. If you want to play a little bit longer term, weekly 8 is your guide, and that's still at 1462. That would mean that you're willing to give up another 6. Well, I imagine it'll come back a little bit higher, so I call it $16. That means you are willing to give up another $4 of retracement, and there's no guarantee that we're gonna keep going up. Look at this weekly upper wick. Okay, chart's looking a little bit more bearish and bullish. Gonna want to see, most ideal case, a bull flag setup such as all the previous ones. No, long-term wedge, bull pennant. Yeah, this one is bull flag, more like this wedge doesn't work. Yeah, bull flag. So you're gonna want to see that, but right now we're seeing a little bit more pullback than ideal. Next, FIII. What an amazing bounce. Start of an amazing spot for the bounce. GP drawing from the low here before the run started to the high of 1530. GP lines up with his trend line. And what happened was we broke under this previous resistance area, wicked right on spot here. From there, we're starting to see a bounce. Key now is Monday, Tuesday, we see that follow through, but anticipation is we will touch that 88, then come back, make a bull divergence. That would be your most ideal entry. Bull divergence, boom, keep it on top watch. Watch for the bull divergence. All right, next, PENN. PENN. Next three tickers are gaming sector. Nice hold of this trend line. Clear support. Okay, support, support, support. Same with here. Now we are still trading over that 88. A little bit more choppy now. Somewhat of a bear divergence forming. Earnings coming up February 4th. I anticipate sideways action into earnings. Then earnings will determine which direction we're going to go. Next, DKNG. It's looking like it wants to fake people out. Finally getting some action. And then trade it over. Fake out, breakout. Come back. Straight back to that 88. Chart was not ready to go. Overall, still looking strong. Watch for the... We're going to have to hold this 88 or else we'll be looking at further downside. When it breaks though, it will be a very nice break. 1, 2... Most ideal is if we see another touch, even just right on this inner lower trend line. That would, even this spot would be an ideal entry. Most ideal down here. Comes, drag it out, you know, somewhere right here. Lower trend line lines up with support. Then from there, see a break. Give this play time because it might drag out for quite some time. Chart's not ready to go yet. Bull volume came in, not significant though, unable to break. This is potentially the next big play. Next big play after Amazon. Next, GNOG. Never looked at this chart before. Broke under support. Lack of bull volume. Significantly higher bear volume. Not a chart that I'm very interested in playing. Broke through all sorts of support. This was the zone to hold. Now we're under it already. In one straight shot like that. Broke over trend line, broke over support. Does not look good. We are getting a little bit extended from the 88 and we are seeing a lower wick forming. Even if we were to bounce from there, I imagine a walk down from the 88. Yeah, chart's not looking all that hot right now. All right, that's it for the gaming sector. Next, there are plenty of random tickers. Just things I'm watching, these things that might be interesting. Let's get started. Microsoft, seeing a pullback. Bull flag is likely not the case anymore due to market condition. Key to hold. Can't see this. 230. Bear volume starting to come in. 230 lines up with 88. Key to hold. Gonna have to watch what the market does. That would determine where Microsoft wants to go. It had a really nice earning too. Too bad. Next, Twitter. Remains on top watch. Likely the bounce has been met for now. We entered right here. Right on this lower trend line. This weekly trend line. Look how strong of a support it is. Bounce, bounce. Came close, but bounced from there. Touch. And lines up with a GP. no reason not to enter this trade. Entered right around that trend line and sold on the GP. Chart came back, kept moving, but these upper wicks have me convinced that we will be looking at a little bit more downside. We'll be looking for that higher low. Charts had a great run so far. Gonna need a higher low relatively soon. No significant volume yet. Already seeing a decreasing on volume. The next play on this ticker, gonna have to be patient. Might drag out for quite some time. Not seeing the normal extension from the 88 and then a slow pullback. Instead, we are seeing a not too far extension from the 88 and a decent pullback. So this could be the lower high before we go down to break the support. Just be cautious if you're in the trade. The 88 is your guide. Next, MRNA. Oh. Alright, Moderna. Okay, yeah. Moderna. I still think that's how people pronounce it. Anyways, Moderna saw a nice pop into blue skies, rejected indecision doji top candle, likely to see a reversal. This was a news-based pop based on J&J announcing that their vaccine effective rate is lower than competitors. So from here, likely have marked the top, because given how far we're extended from the 88, as well as a spinning top, as well as volume, everything is pointing, well, as well as a bear divergence. Everything is pointing to future lower prices to come, even if we're just looking for a daily bull flag to form. But right now, charts not looking so hot for bull plays. Next, BNGO. Still holding that 88. Clear decreasing on volume. The 88 is your guide. Nothing else is very notable here. No bear divergence, no bull divergence. This is a setup of a bull flag. Watch for the volume pop for the next leg up. What a strong chart. Holy. BNGO. Watch for that bull flag confirmation. Next, BBBY. Seeing pullback now, still holding that 88. No, I think this was WSB caused, or caused by WSB. Huge pop. 77% in two trading days. Very choppy. Significant decrease on bear volume with lower wicks forming. Charts looking strong. We passed that 1-2 extension. From here, anticipation, come back up, potentially make a new high, form a bear divergence. From there, then we're going to be looking at downside. Right now, chart is still strong, and we are still trading over that 88. High potential of making a new high. Next, TDOC. This trend line doesn't really apply. Or does it? Let's redraw it. So it's here. Choppy. No, it doesn't apply. Alright, this is going to be no current patterns, no trend line forming that I can see, aside from maybe this one. So we are extended considering how far we are from the last known trend line, but no cause for concern. Overbought conditions, upper wicks, and that's already correcting, but we are holding the 88. Still huge upper wick. Use that 88 as your guide. If we close, watch for the shorter term volume. If you see bear volume, significant bear volume come in, that's your exit signal. We have ran quite far, and we'll be looking at a back test of this previous resistance area. This makes sense. Previous resistance needs to be back tested in between that 227 or 228 to 237 zone. All right, next is space. All right, remember what I said about space? Make sure to take profit. Space is one of those tickers that loves giving back its gains right away. Look at these upper wicks. Hopefully you were watching this chart on Wednesday. Would have been a very nice trade. And it gives, let's see if it gives sign to take profits. Nice popping volume. That's your entry signal at 8:25 midday. Kept running. Ran. Oh yeah, this is your exit signal. Big bear volume out of nowhere. Followed by a huge upper wick on the next candle trying to bounce it. That's your exit. So even if, let's say, you bought the top here and then you sold the bottom here, that's still a 9% move. So space likes to give back profit. From there, we just grind it down. On the daily, still above the 88, well above the 88. We'll be looking at a bull flag forming from here. Nice bull volume, decreasing bear volume. Chart's setting up very nicely for the next leg up. Gonna look for that bull flag, revisit of a 88, then potentially a next leg up. What a nice run. 159% in 16 trading days. Keep this chart on your watch. You haven't watched this chart for a long time, but I think there's reasons to watch it now, especially given how we blue skied, now looking for a daily bull flag to form. Beginning to get very interested in this chart. We'll be going on my top watch. Next, QS. Broke that support. Gap filled. Was looking for that bounce. Didn't happen. Broke a support. Slight increase on bear volume. Chart's not looking great. Potentially further downside. Let's take a look. Oh, extremely weak. In order for bulls to have any sort of confidence on this ticker, we're going to need to break that 88 and close over it on somewhat decent volume. Then from there, just run from it. Then with backtest, and then go for the next leg up. Right now, does not look like a decent play. One of those tickers that you'd rather be late than early. It could just very well just slow grind down by that 88 forever. Okay, FUBO. Trading above the 88. Came back to back test the support zone, support resistance zone. Decreasing bear volume. I'd imagine one more slight reddish day before a next leg up. So looking like it's setting up a decent bull flag. Not as decent as this one, of course. Look at this clear decreasing bear volume. So we're going to have to see that on the next couple days. Keep an eye on it. This chart has potential. Next, PSTH. Strong chart. broke under the clear trend line, rejected from it. Now we got the next day we got bought up right after. Decreasing bull volume, not very convincing on an entry yet. Give it another couple days. A clear sign should present itself. Okay, so there is a clear price right here, 25.30. Resistance, bounce. Now we're bouncing from it again. So watch that price, 25.30. Next, PLTR. Broke under the trend line. Depending on how you draw it, we are on the verge of breaking that last trend line. And if we do, we'll be looking at GP, which is previous resistance support area around 33 bucks. Chart's looking a little bit more bearish, but no significant bear volume. So if we do get to test that 33 area, ideal entry. Next, WKHS, workhorse. Potential wedge forming. Nice bull pennant, short term. Oh, this is already. On the daily, indecisions, lots of upper wick, some lower wick as well. Seem to have a lack of sellers. I like the setup. Makes sense we reject from this previous trend line. A key trend line, we can see that resistance, support, 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 lots of support, became a resistance again, and now it's a resistance again. We'll be looking for that bull flag setup before the next leg up on volume to break the trend line. Chart's looking great. Next, CRM. Not seeing an ideal bounce on this chart. Still a bit more bearish than bullish. Volume, lack of bull volume coming in, upper wicks forming. Nothing of interest. Anticipating that we're going to lose this to 88 very soon. Still choppy action. Not interested. Next, laser. Finally broke over this wedge, but now we're back testing it. Came back down as low as the lower trend line. Lack of bear volume. Would anticipate a next leg up. Decent bull volumes, lack of bear volume. Chart's looking okay. Gonna want to see that follow through Monday, Tuesday. First thing Monday, Tuesday. Reversal, breakover, on volume. Key to break. Right here. 40 bucks. Must close over 40 bucks. Next. CRSR. Still in the wedge. Look for a reaction on this lower trend line. Lack of bear volume. Huge bull volume that got shut down. Looks like it's ready for a break though. Earnings coming up February 9th. This could be the catalyst to cause it to break. CRSR. Next. One last one for US tickers. Zyme. Alright, wanted to bring this one up because just as an example of why we stick to technical analysis, we stick to charts. And I mean, not saying there's anything wrong with fundamentals. They work as well, but unless you have hours to read earnings reports and other reports, to me, I think chart tells a story by itself. And this is a clear example of why we stick to charts. Now we've been in the channel for Zyme, ZYME. We've been in the channel for a very long time. Came up to the upper end and we rejected from the upper end again. Last time we reviewed this chart was right near that top, right somewhere around here. And I mentioned that this is a key support to hold, 52.75. And following that, the GP is a must hold. We lost the GP, that was your exit. With a clear rejection from the 88, then we lost GP the next day, clear exit. Don't end up holding a big. Then from there, huge bear pressure, broke through even this potential trend line that we were looking at, or I drew it afterwards. But from there, huge gap down. Now some lower wicks forming. We are in the daily oversold territory, and considering how far we're extended from the 88, would anticipate a bounce. But given Friday's action, there is potentially a little bit further downside before the bounce commences. Let's look at the 4-hour. No divergence on the 4-hour yet. No notable divergence on the hourly either. Still huge bear pressure. Bear volume clearly outweighing bull volume. Bounce. Be patient on the bounce. It will happen. Or the 88 could just come down and meet the price action instead. Not an ideal chart to be trading right now. But watch for the bounce if you're interested, if you're a scalp player. That's it for US tickers. And last but not least, we have a few Canadian tickers to go through. First one, AC. Got my ad in. What a perfect ad. Perfect area for a bounce. GP from this whole move, previous move, lining up with support zone. And we can clearly see a perfect bounce 1 cent below the GP from here. Now coming Monday, Tuesday, I want to see that reversal. This wick is giving me a little bit of confidence, but until we break over the 88, there's no significant reason to have bull confidence. This is a long play for me into 2022. I'm not going to be too worried about it. When it moves, it's going to move decently. First target, going to have to break that 88. Following, break that upper wedge. And that will give me more confidence. Once we break the upper trend line of the wedge, we will be looking up. First target, 24.35. Then upwards of $28. Risk to reward, liking it down here. Looking bullish, but want to see that reversal. Potential volume climax. I don't see how it's it's gonna have to be higher volumes to be a volume climax. So we could just grind down. Keep that in mind. Next, Suncor. Let's go with the US chart. Still in that support zone, right in the middle of it, getting grinded down by the 88, increasing bear volume, earnings coming up. How's US oil doing? US oil. So this is more so I have to clean this chart up, but regardless, looks like that move is more so Suncor based. With the earnings coming up February 3rd, we are looking at a bull divergence. Interesting chart. There's bull divergence, but based on the increasing bear volume, would anticipate to negate the bull divergence that's forming right now into earnings. Then it's going to be based on earnings. Key to hold, 1623, support, bottom of the support zone. Next, SCR. Interesting bounce. We came down right to the GP, big bounce up to that upper zone that we were watching of the channel, and now we are staying within it. Weekly still forming a bull flag, looking amazing. Gonna drag out for quite some time because it is a weekly bull flag that we're looking at. Next, BRAG. Similar idea to SCR. Looking for that weekly bull flag. Weekly 8 is your guide. Next, NUMI. Fake out, breakout. Breakout, fake out. We broke out over this channel. Broke into the resistance. Then it got shut down. What a fake out. Gonna have to watch for this zone. This lower trend line on this channel. We're gonna want to hold it. Earnings. Standardized. Okay. No surprises. Low bear volume. Expecting a reversal from here. This is on the hourly. Lower low. Lower high. Higher low. Want to see that reversal Monday. Yeah. Next, last but not least, MED. McMahon. Keep price to hold and do not close under 346. Seems like we're just getting held in this zone. Finally had a breakout of resistance, but got shot down right away. No notable volumes, no notable divergences. Sideways action. Cool chart is cooling off. I believe it's monthly. Nope. Weekly. Weekly bull flag. Weekly bull flag. Looks nice. Chart's cooling off. Ready for that next leg up. Loving the setup. Gonna be looking for an entry Monday, Tuesday. Around, let's see, what's a good price for an entry on this? Let's say if we were to break down wicket. Ideally, you want to hold this zone right now. 376, right above the weekly 8. If we break below and close below next week, the weekly bull flag is negated. We're going to want to hold that zone. Low risk, easy defined stop entry. Even if you were to hold, buy in around here, easy stop 320. You want to be conservative. Yeah, right below 320. Slight gap here. 4 cents gap. So put it below the gap. All right. That's it for the weekend recap video, weekend ticker review videos. I hope you enjoyed the video, and if you are looking to get out of debt or build that first pot of gold, make sure to hit the like and subscribe button in order to get updates on our new videos that's being released daily. Also, check out our website at totalcontroltraders.com. Right now, there is still some left on the limited quantity of 7 days free trial to our 24/7 trading chat room that provides live updates. And I hope you guys stay safe and be in control. I will see you guys in the next video. Thanks for watching, guys.